All right. Today we're starting out looking at Berkshire Hathaway, which was one of those bull breakouts I was telling you to watch for. And remember, I'm not necessarily bullish on the entire market. I think a lot of the stocks that are boring that people usually don't trade are going to be the best performers from here. And Berkshire Hathaway is a great example, going up over 2.3% today. And this is one of those stocks I was telling you to keep your eye on because we are getting a multi-month consolidation breakout in the bullish direction where we have gone nowhere for 5 full months and we are just now starting to get a bull breakout. So you cannot put a limit on how high Berkshire Hathaway can go from here as long as it continues to close above this breakout level at 420. Now, just a reminder, that doesn't mean you just blindly buy and have no trade plan. There is still always going to be a possibility where it comes back for a retest at some point, but that's likely going to be a buying opportunity as long as we get buyers at that level. So Berkshire Hathaway is one of those boring stocks a lot of people don't normally have on their radar, but this is a 5-month consolidation period that is just now starting to break out. And I do mean it when I say just now because this is only day 2 of a breakout. So don't forget about this theme that I'm talking about with sector rotation. A lot of you are just trading tech stocks, and while those can continue to go higher during this phase, they can also be weak and go nowhere while these are going higher, or they could even go through a correction if we get a deep enough rotation. So pay attention to these boring stocks like financials and industrials, and this is going to be the theme as long as we have the charts allowing for it. And right now we definitely have the charts allowing for it. Also pay attention to the volume. If we continue to get high volume buying, this could turn into a very powerful rally. All right, so next we'll jump over to SPY, and on SPY, we did hit the price target today, and I told you that price target was right there, right around 564.38. And once more, when we hit the price target, we saw profit taking and we did pull back yet again. So we are continuing to see wicks as we're going higher. And the more I see this price action behavior, the more and more I'm thinking we're getting nearer and nearer to a top, and not a top that's going to cause a bear market, but a top that is going to cause a pullback or a correction. Remember, I think it's very possible we come back to 548 to test that breakout at some point. So at any point, we could reach a peak and then come all the way back down towards that level at 548. And if that peak is going to be right around 564, that's still a pullback of about 3%, which is completely healthy and completely normal in a bull trend. So don't for one second think just because the charts are bullish that we can't get a pullback. At any point, we could see high volume panic selling and get a deep enough pullback to hit support. But because it's a bull trend in a bull market, at support, we would likely see buyers and then just continue to go higher. So if you're a long-term bull that's just trying to ride this wave, I don't see any reason you should be trying to predict tops or time tops. Simply ride the wave and continue to hold those swing trades open as long as we have the bull trend and we're above critical support. It is only if we were to break down below 548 that I would tell you it's likely a good time to start reducing long exposure for you longer term swing traders or even you investors. So this is still a very powerful bull trend, which means all dips should be bought while you have a low risk entry at critical support. But while you're up here at resistance and hitting price targets, that's also a good time to consider locking some profits. So only you know how is best trading for you and how to best manage risk for you. I'm just giving you some ideas based on the chart. And more importantly, it's good to understand that during a bull trend, it is easier to buy the dip and go in the direction of the trend than it is going to be to try to call a top or short a bull trend. So I'm not saying you cannot short as we hit resistance or price targets. It simply just means those are short-lived trades, pun intended, and you should be getting in and out very quickly because the trend is pushing price higher. You don't want to overstay your welcome in a short trade. So if you shorted at 564, you're already taking profits at 561 and you're in and out very quickly. Now, if we do break above 564, that is going to be another blue skies breakout within a bull trend at all-time highs, and that means we're likely going to 569. Now, I'm not saying we need to break out. It's possible we start a pullback now, but keep in mind if we do break out, that is very bullish. On the NASDAQ 100 triple Qs, we were up 0.27% today, and once more, the triple Qs are not looking impressive, and they do look like they're ready for a pullback because this is now day 2 after a bearish engulfing candle of getting a very lazy bounce that fails to make an all-time high and sees sellers before we get to the previous high, which automatically tells you there are sellers motivated to sell before they get to the previous high, which is what is going to cause a lower high rejection. If we do get that lower high rejection, it is likely already starting, and then we're going to push down towards 478. Although you do have to remember there's the possibility we find enough buyers at 485 that we don't actually go that low. However, I do believe if we do break down below 491 to 492, we will go down here towards 478 and possibly even lower. So keep this in mind. I am not telling you the triple Qs are bullish. I am telling you that the financials, the industrials, and other sectors like small cap growth and small caps in general are looking bullish. which could mean that we see a rotation out of mega cap growth, which could mean the triple Qs continue to look weak. However, this is still a bull trend above 491 to 492, so you really shouldn't be getting overly bearish until we get the confirmation of that breakdown. Or at least if you're being bearish, manage your risk at the previous all-time high. And if we break above that, you need to get out of your short positions because we're likely pushing higher towards 507 to 511. So I do think this market is very simple to trade as long as you're being objective. And objectively looking at this chart, you can still be bullish and you shouldn't be aggressively shorting it. But the sign to get more risk off and more bearish will be the breakdown to a lower low after this lower high. But we don't have the lower low yet, so I don't want to make any strong assumptions. We need price to prove it by breaking down and letting price prove it's a lower low from a lower high rejection. On the Dow Jones, we were up 0.51% today, and the Dow Jones is another index that I'm very bullish on here. And as you know, I've upgraded my price target from 402 to 407. And today we did break the previous high and we did close above 402, as you can tell from this candle. And yes, it did close with a doji, but we are also outside the upper Bollinger Band and we're getting a little overextended as these moving averages are starting to catch up. So I do believe it's possible we cool down a bit, maybe build out a little bit of a bull flag above this level before we continue higher to 407. But at the end of the day, what's more important is that you understand there's a good chance above 402 that we are going to higher price targets above 407. So yes, there's always going to be intraday volatility and there's going to be price action swinging around along the way, but focus on where we're going and not necessarily how long it's going to take to get there, because while we have this bullish chart with this very powerful bull trend and we're even seeing increasing buying volume, this is a very bullish setup and it's looking a lot more bullish than the triple Qs, for example, which could be putting in a lower high rejection. So you have to understand sector rotation is likely here, and if you're trading the wrong stocks or focusing on the wrong indices, you could be missing out on it. On the Russell 2000 IWM ETF, we were up 1.9% today, and once more, this fits my theme of sector rotation as we are seeing the triple Qs looking weak and the small caps looking strong. It does look like money is moving into the small caps, which is very evident by the very large volume buying that we're getting, and of course, lots of shorts cutoff size getting squeezed out. So small caps are looking very bullish above the 214 breakout. The next price target I have up here is 220, and even if we get a pullback, you are now looking for support at 214 before we go to 220. And before that, there was a possibility we could pull back to 210. So I told you there was a chance we just went straight up and left you in the dust if you weren't already in this. And that is obviously the scenario that is playing out, which is not surprising because we had this very long-term consolidation of going absolutely nowhere. And then when we had that bull breakout at 210, that put this on a lot of bulls' radar that weren't looking at small caps as a possibility to trade long. So now we're getting a lot of fresh blood and fresh money moving in, and that is causing us to continue to go higher. So you have to understand this is just now hitting a lot of bulls' radar, and the longer we continue to break resistance levels, the more bulls are going to start noticing this. And obviously, if you're in my Discord server, you knew about this way before the breakout because we were getting all of the low risk entries because I had this on my radar for a 2024 swing trade, and I still do have this on my radar as going much higher. But you have to remember that doesn't mean we can't get some volatility, and I can't even rule out the possibility we need a bull flag before we go higher. So yes, we're a little overextended. These moving averages are starting to catch up, but you have to remember in the longer term, if we're going to reach my price target in the high 220s, do you really care about short-term volatility, or is it worth riding the wave? Only you can answer that question for your risk tolerance. You know the critical risk levels. You can manage the risk accordingly. So make sure you have a trade plan and then just stick to it. On the ARKK ETF, we're continuing to look bullish with the higher low, higher high breakout. And ever since we got back above 45, we are looking more risk on. So again, I don't suggest trading ARKK, but it is looking risk on above 45. And that risk on sentiment is something you should be aware of because it's likely going to carry over to other small cap growth as well. On the VIX, we were up 5.46% today, so we are seeing some more fear in the market, which goes hand in hand with what we're seeing on SPY and the triple Qs with those rejections from the all-time high and the lower high rejection in the NASDAQ 100. So I'm not surprised to see people starting to hedge and prepare for some more downside, which could be that pullback I've been talking about. So be prepared for the pullback, but don't assume it has to happen. We need to see the price action breaking through support to confirm it. On Bitcoin, we are currently trading just below 64,000, and I did tell you above 58,000, there was a good chance we would go up very quickly to hit that price target at 64,000. And I was suggesting to consider the fact that this could just be a quick dip below support before another bull rally. And right now we're getting the bull rally and we are looking very bullish now as long as we can continue to close above 58,000 Or you can even up your risk level now to 60,000. Now, this was a trade idea in the Discord server, and we did lock some profits today because this was one of the price targets that I suggested locking some profits. So don't be surprised if other traders are doing the same exact thing. And that does mean we could dip a little bit before we go any higher. But I do believe as we progress through the summer that we are going to see Bitcoin continue to go higher. And I am long-term bullish on it. So it really depends on your trade plan and how you want to trade Bitcoin, whether it's the short term or the long term. But if you look at the volume here, everything is aligning. We're getting a lot of high volume buying on the breakout, and we do have the higher lows and higher highs. So I do believe it's safe to say we have reversed the downtrend and we could be heading back into a bull trend. All right, next I want to continue to hammer home the theme of the sector rotation. I had the industrials as a double bottom breakout, and I went over this again over the weekend, and today we are seeing follow through as we're continuing to push higher outside that upper Bollinger Band. So while these are overextended, there's plenty of time for these things to build out bull flags before they continue to go even higher. So even if we do start to pull back or cool down, those are still buying opportunities before we go any higher. And I do believe the industrials will go to a brand new all-time high, which is going to be very healthy for the Dow Jones as well. Then over here on the financial sector, which is XLF, we had this inverse head and shoulders breakout, and today we did hit the price target at 43, and I do think it's possible we go a bit higher towards 43.56. So again, even if we pull back, you have plenty of support to manage your risk from as a bull with a bull trend, and you can clearly see all of these moving averages are starting to aggressively slope to the upside and create separation. So with the financials looking this bullish, it is going to be very difficult to be bearish on the market as a whole. But do keep in mind, sector rotation means we could have short-term pockets of some sectors like the tech sector, which could be weak while these sectors are strengthening. So remember, sector rotation isn't necessarily bullish for every single sector. We're talking about money leaving some sectors and flowing to the other sectors. So jumping back over to the S&P 500, I do believe the call for sector rotation is playing out objectively from the price action on the charts, and it's going to continue to play out as long as the charts allow for it. And that's why I continue to show these charts we're not used to looking at, like Berkshire Hathaway and the industrials and the financials, as well as the powerful push in small caps and ARKK. There is one more chart we didn't look at, which is the biotech sector, which is also getting a bull breakout as well. So we're getting plenty of evidence across the market from objective price action and chart reading that tells us the tech companies are cooling down as these other sectors are starting to show some leadership. We don't know how long this is going to go on for, but it's likely going to be a theme for at least the first part of this quarter. And again, longer term, the tech companies are going to be just fine, but there's only so much money in this market currently, and unless we get more money from the sidelines, this sector rotation theme could continue to happen, and it could cause volatility in the short term, especially if you only have tech stocks on your watch list. So in the Discord server, I'm going to continue to give plenty of trade ideas from these other sectors, and as you know, if you're in the Discord server, there are a ton of trade ideas right now. It is up to you to go through those trade ideas and figure out which ones are best for you and how you want to trade them. Because when you're getting lots of trade ideas, it's very important you have a very clear plan and you know exactly what you want to trade. I like trading just a handful of stocks personally because it's a lot easier for me to manage than it is to be in a portfolio of anywhere between 20 and 50 stocks. But again, everybody has their own strategies. Everybody has their own way of trading. I like to keep it simple and trade the fewest things possible, but I am focusing on these other sectors and these other indices because I do believe they're going to be the strongest performers. So if you want those trade ideas and access to my intraday updates and my technical analysis, that's going to be in my Discord server. And you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.